What's going on, YouTube? Welcome back to today's video. Today we're going to be covering the Vanguard Total Stock Market Index, otherwise known as VTSAX. We're going to be touching on what's inside of it, why it's important, and why I will be choosing this within my Roth IRA for the foreseeable future. For those of you that are new here, my name is Gabe. I teach everything personal finance related, financial literacy, and how to better overall manage your money. Let's get into the video. Investing in an index fund is a little bit different than picking individual stocks. The nice thing about an index fund is it typically follows the US economy and it can return up to about 7% per year annually. Now, this is great for those investors who don't have a lot of time to spend analyzing and researching various individual stocks. So this allows you to invest in one index fund that tracks every single part of the economy. So various different sectors within the economy, and this really gives you a little bit of peace of mind going forward. So what is in VTSAX? Well, VTSAX has over 3,600 companies, as we mentioned. However, some of the major holdings include Amazon, Facebook, Tesla, Microsoft, and Berkshire Hathaway. Now, these are just to name a few. They also include small, medium, and large cap growth and value stocks. And this is very important because you're very well diversified throughout many different sectors in the market. So VTSAX has a majority of investments within large companies. Now, the majority of these companies would have to go bankrupt. The country would have to go into complete meltdown for you to lose all of your money. So it's pretty safe to say that this is a safe investment going forward, and you can plan on investing for decades to see this steady growth. So here on the screen, you can see that I've listed some facts and statistics about VTSAX. So VTSAX was created in 1992, and the goal for it was to allow investors to have very low fees associated with this. As you can see, there's an expense ratio of 0.04. Now, the expense ratio is simply fees associated to investing within the account, making sure that the account stays managed and it's rebalanced. These are type of the fees that you pay. Now, this is about 96% lower than other competitors that have these holdings within their funds. So VTSAX also requires a minimum deposit of $3,000. Now, if you don't have the $3,000, you can invest within a fund known as an ETF called VTI. Now, VTI also follows the total stock market index, and it's just a little bit cheaper. So you don't have to have those Admiral shares to get in. You can pay whatever the market price is of that individual share and then build your way up over time until you have that $3,000, and then you can transfer it through Vanguard. And you can do this through different funds as well, Charles Schwab, whatever it may be. Now, at the time of making this video, the current share price of VTSAX was $98.19 per individual share. Now, this may seem like a lot, but back in March of last year, this had dropped to the $40 range. So you can just think of a huge gain that you would have made if you invested last March, kind of when the pandemic hit. So as we mentioned, diversification is very important, and this is one of the reasons why I enjoy the index fund VTSAX. So there are different sectors that this fund invests within. Now, the major one includes technology. So technology makes up over about 26% of this holding. Now, it also invests in consumer discretionary, industrial, healthcare, financial, real estate. So you aren't just invested in one sector, and this is the nice part about it, and this is why I will continue to invest within VTSAX within the future. So the other major reason I'm investing within VTSAX would be for the diversification. So as we mentioned, all of the different sectors that we're investing within, these are very well balanced. So I'm not stressing myself out, worrying about rebalancing my portfolio every month. I simply let the index fund do its thing, and I enjoy the benefits over time. So the last reason would be due to the low expense ratio. The low expense ratio is very important because you could be losing out on hundreds of thousands of dollars as you retire. So the 0.04 is very low. This is 96% lower than the average. So you're talking 1%, 1.5%, if you're paying a financial advisor to manage your portfolio, this can be very dangerous in the long run. You could be losing out on a ton of money. So you need to make sure your expense ratios are lower and you're making sure you know what you're doing with your money. So these are some of the main reasons why I invest within VTSAX. I think it's a great index fund if you don't want to worry about it. It has very low cost, it's very simple, and it's also very well diversified. What more can you ask for an index fund? Guys, if you enjoyed this video, please like, subscribe, and share. I truly appreciate your support. We'll see you next time.